I would say the best piece of advice is that you need to take up your mental health. Like, make sure you're eating right as you're building a business, exercising, because it can be very difficult when it comes to time that you might neglect your personal life. And I would say that that's something that you have to make sure that you're also working towards improving whilst you're also doing a business. Because most of the times you tend to neglect one side of your life because you're like, I'm chasing this dream, I'm building this company. But it's very important to look after yourself.
You're listening to Not My First Guess. I'm Hattie Willis, your host, and each episode I talk to an entrepreneur, investor, or startup expert to unpack their hardest moments, biggest wins, and hard-earned advice so we can shortcut our learnings as founders together. Today I'm joined by Alberta Asafo-Asamoah, a social entrepreneur and educationalist, and co-founder of Liquify, an invoice marketplace that enables SMEs or small, medium-sized enterprises in emerging markets to get quick access to affordable cash. Having started her career building deep expertise in the financial world, Alberta left banking in 2018 to pursue a career in impact investing because she wanted to combine her knowledge and experience in financing with her passion for social issues and social change. This led Alberta to first found Algebra In The City, an educational tuition and consultancy business. Having spent some time herself as a tutor, Alberta had seen firsthand a disparity between students that went to private schools and students who went to state schools, including differences in the way students have been taught to process information and problem solve. This led Alberta to want to make education more equitable for young people by making tuition much cheaper in order to increase accessibility. However, one of the things that we dive into in this episode is Alberta's desire to build something at scale. And once she realized this wasn't the business she wanted to be building for the next 10 years, it was time for a pivot to build something more VC backable, a pivot that ultimately led her to Liquify. In this episode, we talk about internships and the importance of sometimes taking a step back when you're starting something new, mistakes you make when starting a new business, the importance of deciding whether you want your business to be scalable, what VCs really want, the importance of finding the right co-founder, prioritizing your personal life while running a business, and so much more. I hope you enjoy. So the first thing I always want to ask our guests is about their journey into entrepreneurship. And I know that Liquify isn't your first startup. So maybe we can go back in time and talk about how you got into entrepreneurship. Was it something you always saw for yourself? Was it a surprise?
So I would say that I come from an entrepreneurial family. So I think when you come from an entrepreneurial family, it's easy to potentially explore entrepreneurship later down the line. The question is, I guess, when do you actually want to do that? My dad is a civil engineer and he started a business obviously within that space. So I always knew that at some point I will pursue entrepreneurship. And I'd also say, coming from the African culture, I would say that a lot of the times, a lot of Africans have at least two businesses. And I think it's probably due to, if you live in like Ghana, where I'm from, most of the times, of course, salary is quite low. So a lot of the times people have multiple streams of income. So whereas now we have like a portfolio career, like in the UK, in a lot of African countries, a lot of people have more than one. So for me, I think it's always been something that I knew that I'll probably explore something alongside a traditional career. So after working in banking and also impact investing for a while, I saw that there was obviously a space to explore. So I decided to do a bit more research into areas that I'm interested in and go into entrepreneurship.
So let's talk about Algebra In The City. You said that you'd already known you would go into entrepreneurship. So what was it about this idea, this time, that made you think, I'm going to start something?
So I used to be a corporate banker, so providing debt finance to companies in the UK. But then I realized that the most part of the job that I really liked was interacting with the customers and the companies. And I thought, okay, well, how can I incorporate my experiences in banking in the UK with sort of passion for social impact investing and what have you? So after a couple of years in banking, I thought, okay, well, I probably want to go into some sort of impact-driven role. And at the same time, I had started teaching students math and English and GCSEs. And I really liked it from when I was young. So I was doing that during the weekends while I was also doing banking. So when I decided to quit banking, I was like, okay, I want to go into impact investing, but I can kind of explore entrepreneurship before I do that. So then I was like, okay, I can do something within math and English. So I worked at a local tuition center to teach and help them create a curriculum. And then I was like, okay, well, I want that to be scalable. So I then thought, okay, I can do something edutech. So that's how I started Algebra In The City. And the reason why I really wanted to focus on education is because at that time I had taught students that went to public and private schools. And I saw that sometimes there were differences in sometimes the way people process information or how they can problem solve. And I saw that there was some disparity sometimes in people who went to schools in maybe more disenfranchised communities and what have you. So I kind of wanted to make education more equitable for young people and make obviously tuition much cheaper as well, because it can be quite expensive. So that's what led to me wanting to start Algebra in the City, coupled with wanting to explore something outside of banking. So yeah, that's where the passion of sort of entrepreneurship started with Algebra in the City.
And tell us more about that. Were you doing it alongside other work? You talked about kind of often this like portfolio approach.
Yeah. So when I was doing the Algebra in the City, I also was looking to social impact investing as a career. And because of course I came from banking, I didn't have that impact, the technical skills in impact investing. So I wanted to do that. I wanted to try get into maybe a role that would allow me to learn about the technical aspects of that role, that space. So then I actually ended up taking a step back and doing an internship into an impact role in London. A lot of people don't realize that just because maybe you're making quite a bit of money in banking or another career, sometimes if you want to try something new, you can kind of take a step back. And of course, it can be quite expensive. But yeah, whilst I was doing Algebra in the City, I was also working in an impact investing firm in London. And I was focusing on raising capital for SMEs across Africa, mainly in East Africa. And I really, really enjoyed that because most of the times the SMEs were creating a lot of jobs. But when it came to access to funding, it was very, very, very difficult. So I got to explore my traditional side of career whilst also doing the entrepreneurship on the side.
And how
Yeah.
did they inform each other? So like what were you learning in your impact investing
Yeah.
role that you were taking into Algebra in the City and vice versa?
I think the main thing in investment type roles is maybe understanding what funders or investors will be looking for when you are trying to raise money for a business. And also what also not to do or what to do as a business owner. I think because it was my first time starting a new business, I make so many mistakes. I made so many. One, it's kind of like hiring a tech person who maybe didn't understand the commercial aspect of the business. Sometimes they don't understand maybe what customers want. And likewise, I didn't think that I needed to explain it, which it's obviously was down to me.
But like a really common mistake, I think. I think there's
Yeah,
something lots of people will be going, I'm struggling to get my tech team to understand the why. And it
exactly.
feels obvious.
Exactly. And that was just something that I for some reason, I assumed that the tech person is supposed to do that for you. You're just telling them what you want on the platform. And another thing I didn't do, which is probably the biggest thing, is I didn't even ask customers. I did it based on my understanding of teaching young people and what I really thought, okay, education and tech platform should look like. I didn't ask anyone, actually. It was just based on my passion. So you never start off a business based on just what you think you should do. And that was a big mistake. So I think obviously when you're in an impact investing role, in an investment type role in general, you learn how to do things properly because investors are not going to invest in a company if they don't know whether the founder, the structure to their, the method, or they think about the problem, they understand their customers. So I think that definitely was an initial learnings that I definitely got from that.
Were there any assumptions that you can remember that you'd made and then you spoke to customers and you'd got it really wrong?
An assumption I'll make, maybe more detailed, is that, so I wanted to create a homework platform. And I assumed that people would come in and just type in their questions for homework and then they'll be happy with someone putting in, like giving an output. But sometimes people like further explanations and there's follow-ups and things like that. So I think more so especially since you're dealing with students, young people, 16 and under, you really need to understand how they behave or how they process information. They also won't just go somewhere themselves to maybe look for something. They need a bit of guidance. And I think that was a lot of there were the wrong assumptions I had made, that students would, because they need help doing something, they would go and maybe find it, or they liked in and out, like input and output. But actually they need a bit more help. They need almost like a parent in a way.
You know what? I think that's I actually think that spans way beyond kids.
Absolutely.
We all think this like, oh, I'll build this and they'll know how to use it.
Exactly.
And then you're like, why aren't they doing it? And so they just don't understand what's expected or what's needed.
Absolutely. It's even our business admin, but we'll probably go into that. But no, absolutely. Don't just build something without, it's almost like there's a bit of psychology that's required. You need to understand the psychology of the person, the customers. And if you don't, even though they might say something, they'll do something else. And it was just such a conflict with what you're trying to build and what's actually happening.
100%.
Yeah. So it was, yeah. So I had to basically end up doing it more of doing things off the platform, which was just like I invested money onto onto the tech part of it. And
Mm.
just
And
but
so what happened with the business? You're now testing this at the same time that you're learning about impact investing.
yeah,
What happens with both the impact side
yeah.
and the business side?
So in terms of the algebra, so I began to consult more. So I did more consulting with the local tuition centers and also parents and students in terms of their educational journey. If people wanted to get into selective schools, how they go through that. So I wanted to really gather more data because before I ended up doing something or spend more money on their platform. So I did more things off the platform, and it's become more of a passion project and something that I will probably go back in the future. So yeah, so that was more me. After that, I decided that I would focus more on really understanding the different people that would need to be on an edutech platform.
It's something I want to touch on because I think it's really hard as a founder to know when to put down an idea.
Yeah,
So how did you know to put it down? And looking back,
yeah,
now you're obviously on your next
yeah,
startup. I feel like you've probably got the hindsight to be able to
yeah,
say maybe how it felt at the time, but also your lessons on whether it's the right time. Should you have
yeah.
done it earlier? What went into that decision?
I was obviously privileged to have tried to do something after banking, but like it's after a while, if you're just putting money into something, you have to really think, okay, am I going to get investment? What's the path looking like? And it was obviously paying the bills, but you want to be comfortable sometimes. And I think you just have to look at situations and assess, okay, well, am I going to get funding or what kind of support do I need? Is it scalable? If it is scalable, how do I reach that path of scalability?
Mm.
And I think at that time, while I did really like that space, I think it was more of a passion project rather than a long-term business I wanted to stay in. I think it's something that I'm passionate about from a personal standpoint. And I think there's a lot of opportunities there, but I don't think it's like a business that I wanted to grow.
Mm.
So then when I thought about that, I was like, okay, no, let me just focus on my impact investing, which is my career, which is what my professional career, because I wanted to, of course, learn more about that. And I think it's very important to know that when you are an expert in your domain, it's easy to find the problems and come up with a scalable idea.
Mm.
Whereas if it's a more passion project, you kind of just test and do things without maybe really understanding, being an expert also in that area.
And I think one thing I want to pick up on is this point of scalability,
Yeah.
because you use that word a few times and it obviously matters to you. And it's
Yeah.
something I try and encourage founders
Yeah.
to interrogate a bit.
Yeah.
So if that's something that really matters to you,
Yeah.
then actually you're right. You need to assess
Yeah.
what's the most scalable business model,
Yeah.
the space, where can I use my expertise? Some people don't need it to be massive,
Absolutely.
massive.
Absolutely. Because you can have an SME, at the end of the day, like a lot of SMEs are really the bedrock of a lot of societies. They're the ones that create a lot of jobs. So you don't have to have a 100 million plus business. You can have a really good, solid 2 million business that's doing well, that's hiring people and making a lot of impact in the world. So you don't really have to do the scale. You don't really have to follow that. So that's definitely, I definitely agree.
So how did you know
Yeah.
when you were thinking about this, whether you wanted it to be scalable? How did you know that that mattered to you so much? And when did you start asking yourself that?
Anyone who starts in a business, there has to be um, your own financial commitment, right? And I think if you're willing to really go out and put a lot of your personal resources and a lot of time, then of course, like that's fine. You don't necessarily have to think about the scalability in it or want funding because you might want to just put your own money into it, quite frankly. Then if you're like, okay, I need to get funding from X, Y, because I think this opportunity could get to 10 million or 15 million or what have you, that's when you have to kind of look at all the sources of funding and see what are the requirements from all those respective places. And I think that I knew that I would probably want to have a VC backable business. So then I was like, okay, what would VCs want? And also, what would VCs align my background with? I think, unfortunately, because I come from a banking and finance background, VCs want me to do something within that space. And I think that if you do a checklist of everything, your product, your expertise, the founder's expertise, and what have you, you realize that actually, I don't know if I would get far in terms of funding if I continue that way.
And it's something Jasmine talked about on her
Yeah.
episode where she was saying that actually she started with a
Yeah.
non-VC backable business without
Yeah.
realizing. and she killed it because she wanted to build a business at scale. And if you want that, you've got to ask yourself exactly as you did.
Absolutely.
What do VCs want?
Yeah.
And they do have huge expectations.
Absolutely. Absolutely. Because they're looking for like 10x, and it's like, okay, this business will do well, right? But it will just be, it will probably be stable. But then VCs are not looking for that. And then it's a tough thing to swallow, but then you have to kind of assess what you want to do there. But also I would say, although it was an area that I cared about, I don't think it was more of a passion project rather than business that I would probably have wanted to do. I think that's why I made that decision. If it was something else where I was passionate, especially the business we're doing now, then I think that would have been different. I probably wouldn't have cared about that sort of scalability because I care more about like the people that I'm trying to support it. I cared as well for Algebra In The City. It's more so of like, would I see this as a business that I would do maybe in 20 years or 30 years? And I was like, okay, it's something that I like and I really enjoy, but it's a personal project rather than a large scale business that I would want to do.
I think these are such smart questions to be asking yourself, to be able to say, actually, is this something that I want to keep pouring my energy to? Is this the thing I want to grow? If I want to grow it, how big do I want to get it?
Exactly.
And I think that brings us really neatly to Liquify.
Yeah.
Because obviously this is a very different kind of play, right? So you said that you'd already started thinking, I think smartly, if you want to build something really big, you've got to look at where your expertise sits, because people are going to back you firstly for your expertise.
Absolutely.
And so where and when did the idea come from in this mix? Like you're thinking about, I think I want to build something bigger. Talk us through the beginning.
So I did my MBA at Imperial. And when I went to Imperial, I had a business idea in my mind, which was a fashion marketplace for the African market, for designers and brands in the African market to get access to sort of new customers in Europe and what have you, hopefully to solve sort of some of the logistical nightmares when it comes to shipping and what have you. So I went into Imperial, my MBA, looking to explore that. So I did a couple of pitches with that idea. I actually did my entrepreneur course journey that in mind. And then I went into a accelerator program. And when I went with the idea, but then I had been working on the idea for about a year or so. And I met my co-founder, my co-founder at the same accelerator, and exchanging the ideas of what we're working. And I definitely want to stay within the, emerging markets, specifically Africa. And I was like, okay, I've been working on this for a year. Honestly, I think investors wouldn't invest in me with a fashion platform, honestly. Mm-hmm. And she shared with me this idea of Liquify that she had been working on because she worked in trade finance at Citi, and I also worked in corporate banking. So she mentioned the idea to me that she had 2 years prior.
And can you just tell us, like, at what stage, what idea is it at this stage? Because I'm curious to come back to, like, has it changed? Was it as it is now?
So she had the idea of Liquify 2 years ago when she was in trade finance at Citi, where she saw that a lot of the SME clients that were looking for sort of financing were not able to obviously get access to the financing that they wanted. So she had the idea that, oh, wow, if this happened in Asia, it would probably be the same in Africa. So when she spoke to me about the idea, I was like, oh, that's very interesting, because I'd also been in the SME space, investing in SMEs in Africa. And I knew the problem, and it just fit. I just understood who the customers were. I understood the problem. And when we spoke, we just clicked. And then we thought, okay, well, let's do this. Like, let's work on this together. So yeah, that's where we came together. And basically Liquify is an invoice marketplace that connects exporters in the emerging markets to working capital financing. So anyway, we've been working on it for about a year or over a year. And that's kind of how we've come together.
Love it. And for anyone who doesn't know anything about invoice finance, working capital finance, can you just explain that a little bit more for them?
Sure. So in Africa, access to debt is extremely difficult, especially if you're an SME. One, is very expensive. If you look at places like Ghana or Nigeria, it could be 26% plus, 40% actually, a lot of them I've heard. Here, we can't even think about that, having to pay 40% on a loan. So, and then there's obviously requirements like collateral, and some don't have the collateral to actually meet those banking requirements. Then, of course, the banks also have their own internal sort of risk models that they have to also adhere to. As a result, they won't service the needs of some SME clients because they'll deem them as risky. And there's not a lot of alternative funding arrangements available for those SMEs. So essentially what we are focusing on is we're trying to drive liquidity into the emerging markets And we think the best way to do that is through trade finance, because if you think about it, you're focusing on businesses that are trading with maybe multinationals themselves. So what happens usually is that for SMEs that are exporters, maybe there'll be like 30 days that they'll have for the payments back.
And
Right?
30 days for multinationals is actually quite short, right?
Yeah. It could be 60 days. It could be 75 days, right? And also if you're an SME, sometimes you might not have the bargaining power to reduce that, right? So that means that within those days that you're waiting for your money back, it's very difficult for you to probably pay your suppliers, or you're using your cash flows to pay your suppliers, right? So what we're doing is we're working with exporters, or we're supporting exporters that are trading with multinationals. We're giving them financing when the goods are on the ship, and then upon maturity, their buyer would pay us back. So therefore, they can pay their suppliers quicker. They could basically pay other parts of the operations much quicker when we kind of reduce their working capital cycle. Yeah, and hopefully that would help spur economic growth, because then they're paying their farmers, or if they're in agriculture, much quicker. And yeah, so that's where sort of the idea, that's what we're trying to do, really kind of drive liquidity in the markets and help businesses grow at scale.
So you have this idea, you obviously both have deep expertise in the space, but how do you even get started with this kind of fintech? What were some of the things you thought we need to test this first? And how did you go about testing some of those really early risks?
Yeah, sure. So the main thing is, of course, sometimes when you say Africa, everyone's like, that is so risky, right? Because they don't understand the market. And even like maybe a maybe SME or the mid corporate here that is also working with maybe African suppliers, they will probably struggle to get financing. As long as you mention Africa, there's a risk perception. So that means that your go-to-market has to be quite strong. So that means that you really need to assess the kind of businesses that you would be lending to, who they're trading with, right? So our requirement is that the business has to be trading with a multinational, and not just maybe a really small player in the UK, because that means that if you're trading with like a Tesco, that means it's obviously robust. Tesco will pay back on the when it's due. Also, we're dealing with SMEs that have trading relationships that exist for like 1+ years.
Okay.
So therefore, our initial criteria reduces that risk, and also we're focusing on post-shipment financing. So that means that the risk is now moved from the SME to the buyer, which is the large corporate. So we're essentially de-risking the investment by focusing on by focusing on exporters that are shipping with multinationals, where the goods are on the ship. And that's where we get the financing. Because if we did it before, that means we have to rely on the SME's cash flows, and that's be tough.
Yeah, really risky.
Yeah.
And so was that to me sounds like a lot of thought has gone into where to your point, your go-to-market strategy.
Absolutely.
Was this like the first idea? I want to get a sense of, as co-founders, when you were like, you've come together on this accelerator, you've identified this space, you're kind of going, oh, actually, I think we want to work together.
Yeah.
What were some of the things that you had to do as a co-founding pair first to get this off the ground?
Yeah, sure. I think one, you have to really understand where your skill sets lie as well, and really leverage those skill sets. So my co-founder she's from consulting as well, so she's also very detailed, and she's good at go-to-market strategies as well. So that's really good when it comes to, okay, well, how are we going to get started? Like, where are we going to go? I've also worked within the SME space in Africa. So when it comes to outreach to SMEs, and also maybe groups that would give us access to SMEs, it's easy to also go through that. So I think you have to really rely on your strengths. And I think that's where now you're like, okay, that's why investors want the founders to come from to be from an area where they have domain expertise. Because when it comes to go-to-market, you have to be able to use your existing networks to really kind of get going. So that's really relying on our expertise and trying our best to kind of figure out, okay, what do we have, and how can we leverage that to get to the next steps? Yeah.
And so what have been some of the hardest things about setting up this business specifically? Some of the big learnings along the way?
Africa has so many opportunities, but there's also quite a bit of risk as well, in the sense of sometimes there's a bit more education involved in explaining maybe the product with SMEs, because if you think about it, because of the history or what have you, sometimes people are don't trust maybe new players that might come and say, we want to offer you this, because it's like, what do you want in return? So I think definitely when you're focusing on emerging markets, you need to understand the culture, right? You need to also just understand how that could potentially impact time and doing things, and explain to people how this would work or how it will impact their business, because they deal with things in a different way than we would in the UK. So that's definitely something that we're obviously always learning as well. Also, part of our go-to-market also has included getting involved with, for example, some government organizations. And I would say that sometimes when there's like a change of power or what have you, sometimes the people change. So also when you're following up or when you're engaging with people, it can be quite difficult because the person you were engaging with before might not be there. So it's quite tough there. But it's such a rewarding place though to do business. Like there's so much there's so much opportunity. There's so many exciting things to do. And I think that's why whilst we're doing this, I'm just like, oh my goodness, like if people really knew it's such a gold mine, there's so much opportunities, there's so many ways to support. And also, I think another thing people have to understand is while there is education involved, don't assume that you're just going to tell people what to do. I think sometimes when people go into Africa, they probably feel like, oh, I'm going to help these people. No, people know
savior mentality.
Exactly. People know what they're doing. It just has to work right when they need it. Just because you'll come to give them financing doesn't mean that they have to jump at every opportunity. It requires a bit of understanding them and their business. So yeah.
And to your point, it's like about adapting to the way that they do business,
Absolutely.
not trying to push on your way of doing business.
Absolutely. And I think that's probably the biggest learning, actually. Yeah, I think we even spoke about it this morning.
Interesting.
Yeah.
And what about co-founder dynamics? So you met on this accelerator.
Yeah.
You said like there was instant kind of co-founder chemistry.
Absolutely.
What were some of the things that made you think, I want to be a co-founder with this person? And also, what are some of the lessons like since?
Yeah.
Because I think learning how to be a co-founder with someone is like a romantic relationship,
Absolutely.
right? You're really having to be like, well, what am I going to do that might frustrate you? What am I going to do that can make you feel really special? All the same stuff.
No, absolutely. And I think
not all.
no, but
most.
No. Honestly, I think the most important thing is like having the same set of values or like really understanding the product. I think if you start off a co-foundership with a business that maybe someone is just seen as just a business and don't really care about the customers or they just want to make money, it can be very difficult because then if it gets hard, they'll probably just quit, right? Whereas with us, I think the opportunity is so big and also we care about the customers so much and we get so excited anytime we have a conversation that I think that supersedes everything. So even if there's like tough moments, that's insignificant in the grand scheme of things. I think the reason why I really thought it was good to have a co-founder, because I've always been someone who was like to work by myself.
Interesting.
Yeah, which is a big difference. But having a co-founder, it's good because there's set of checks and balances. And there's also ways where you can rely on the person when there's a moment where maybe you're not really feeling 100%. And that's really, really big. So I think that's where we can get to really rely on each other. And also, I think if you're doing something like fintech as well, you do have to have a co-founder who is diligent and also has expertise because that's what you're dealing with people's money, right? And I think when I saw that, okay, I am working with a co-founder who is like that, and that really adds a level of comfort to building a fintech because that person is like, okay, we're on the same page. I'm diligent. We can get things done this way, or it's structured and things like that. So I think that really helped. Just because someone is your friend doesn't necessarily mean they should be your co-founder.
True.
If you're starting a business, I think in an industry, what it is, I think, what contribution can they make or how are you seeing them work towards an idea or as you're dating and what have you. And I think that definitely will give you comfort when you decide that, okay, I'm going to go into business with someone.
Love that.
Yeah.
So there's so much still to dive into. So I want to talk about Techstars. You were on the 2023 cohort of Techstars.
Yeah.
Obviously, a very well-renowned program.
Yeah.
I think lots of people who are maybe interested in it and or don't know anything about it would be really curious, like, what were some of your big lessons that someone who can't go on Techstars can still benefit from?
I think I would say one of the big lessons is that don't overthink because sometimes you need to test something quickly. I know, of course, all the time you have to be diligent in everything that you do, but sometimes just do it. Just move. Because if you wait, like, if you're overthinking, you wait, let's say 2 months before you implement something, then let's say in 2 months it's wrong. That means you're going to have to start the process again. So why not just do it a little bit earlier? Always do things diligently. But if you feel like, okay, I want to test something, or okay, let's get this to market, or let's pilot this quickly just to see what results come out of it. Do it quickly. And I would say that don't wait don't be overthinking. I think textiles helps when it comes to, okay, come on, move along. I would say that's one of the biggest lessons.
I want to go into that
Yeah.
because I feel like this is so key for
Yeah.
founders, but also
Yeah.
really tricky for people who are operating in like regulated spaces.
Yeah.
I think they often
It's true.
feel like, how do I do that? And
Yeah.
obviously, actually, as a fintech,
Yeah.
how have you done it? Like, are there some practical examples you can give where you actually were able to test things maybe quicker than people would feel possible?
Yeah. So this is probably a cop-out actually, because so we're a factoring company. The nature of what our business is a factoring company, which means in the UK it's not regulated. So
Non-regulated fintech. I love it.
yeah,
It's all the way out.
so that's a really good thing. But at the same time, when you're making payments or what have you, and you're dealing with like a payment processing partner, they also have their own requirements.
Yeah.
So that means even though you're not regulated, you still have to adhere to requirements, and you also have to have your own checks as well.
Yeah.
So I would say that if you're not regulated, you can partner with another company that is regulated for pilots, because some companies are really willing to support businesses to actually test a few things and before they actually go into market. So that's a really good way of trying something,
100%. It's
Yeah.
actually a really, really good example. Thriver, Elliot Brooks, the founder of Thriver, which is a health tech, which is a kind of space that, again, they're doing blood testing. You would
Oh,
think
yeah.
you need to be regulated.
Yeah.
To your point, they found a partner who was willing to test with them, who was regulated, and that let
Exactly.
them sell the product really early.
Wow.
Yeah.
That's amazing. Exactly. Yeah. So
Love
there are
it.
ways to do it. It's just, just make sure you explore it and don't wait. If you're like, oh, you found a partner, okay, try and see how that can go.
Were there any examples from you testing things with Liquify where you were surprised by the results and glad you tested early? Or where you felt you tested too late, maybe pre-Techstars or...
So our product is focusing on post-shipment financing, where we give financing when goods are on the ship. But then we found that a lot of customers were also interested in pre-shipment financing. And whilst that is part of the product roadmap, because obviously we're doing our pilots, we wanted to focus on the more sort of de-risked transactions. And I would say that, but then there was an opportunity to do a pre-shipment financing one, and that gave really, really good results. And also the customer that we financed was a really strong customer where we can actually do a lot of things with, a lot of potential transactions with that customer. And I'll say that if we had probably closed our minds to, okay, no, we're not doing that, we probably wouldn't have seen that actually let's focus on businesses that are in the UK, so the buyers in the UK that are have supplies from Africa rather than just going to Africa this way. Right. So I think that kind of helped us in terms of our go-to-market, where we should focus on, because we kind of spent a bit too long to actually realize that. But yeah, that really came up with some good results.
And it's, I think, good to be able to reflect like, hey, maybe that bit was a bit long.
Yeah.
We'll learn from it from next time.
Yeah. And then also we could do both, but we just want to assess whether what the market is saying.
Test the demand rather than assume every time.
Absolutely.
So how is the business model still changing? What's next for Liquify?
Yeah.
What are you excited to test in the coming months?
Sure. So we're in a pilot phase. Our website is live. Our platform is live. So we're just basically going through our pipeline at the moment and to fund some of these businesses on our pipeline. I think what I'm really interested in seeing is like how, because a lot of the businesses in our pipeline are within agriculture. So I'm really interested in seeing how the different verticals and industries within agriculture, so like the citrus industry or the coconut, or the way they behave is so different, because especially, for example, right now, the citrus industry, right, specifically like oranges, the price of oranges has skyrocketed. So for a lot of the people actually producing them, their margins are probably good in that space. And it's because of what's happening in terms of citrus greening, which is an issue with the production in sort of Brazil and the US. Okay. So it's like, that's an example of understanding sort of the different industries in agriculture.
Yeah.
Right. So I'm really excited to see what's happening in, let's say, the coconut space, or what kind of financing that space needs, or what kind of financing the cocoa industry needs, because it's really, really different.
Do you ever think you'd be saying the words, I'm really
Honestly.
interested in what's happening in the coconut space?
Oh, no.
Like, what's happened?
Yeah, no, honestly, I actually have a coconut business I'm affiliated with in Ghana, so that's interesting. But to your point, like I didn't realize I'll be saying that about what's happening in the citrus industry or cocoa. Like I'll be very into sort of reading news about that.
I love
So
it.
that's very exciting.
I'm trying really hard not to make the "that's coconuts" pun, but I'm gonna I'm gonna do that thing where you like say I don't want to say it so that everyone knows that I thought of it, but I don't have to
It's
embarrass
like,
myself. So, what about some of the challenges that maybe you didn't see coming? Because I think this is the thing for a lot of founders
yeah,
thinking about going into entrepreneurship, or
yeah,
a stage before you where they're like really just starting to form those relationships. And it can be about anything. It can be about the practicalities of running the business,
yeah,
it can be about co-founder dynamics, or it can be just like about you as a person. And I think
yeah,
you've done this twice now.
yeah.
So what were some of the things that surprised you maybe both times?
So I'll do things according to my own time.
Mm,
But I've realized that now I'm kind of reverting back into the corporate way of doing things in sense of it, just because when you start a business, you think, okay, well, it's my business, so I can go into the office at, I don't know, 12 p.m. or whatever, and maybe leave the office at 8 p.m. But once you start realizing that actually you have to get up early, there has to be structure. I know it's so common sense, but I know it's common sense, but you really start putting real structure in place because
yeah.
things just end up, you just have to do that in order to actually get results. And I would say for me, that was, I thought I'd have a bit more flexibility, but actually, I'd say that's one of the key ones.
And I think it's something I always say to founders, if that is genuinely the reason you're starting your company, then you have to be super protective of that. Because to your
Yeah.
point, the default is that goes.
Yeah.
And sometimes you can have it like it does. If you can plan far ahead enough, you can be like last
Yeah.
week, I took 3 half days because my brother was visiting from
Yeah.
Bermuda where he lives and I never see him. So it was like, okay, I'm going to commit this time.
Absolutely.
But let's be real. I'm also the person who's super non-committal to holidays because I'm like, well, I don't know how busy it's going to be. And
Exactly.
like,
Exactly. So yeah, you do have that flexibility of some maybe holidays or some things, but when you are on, it's different, right? You have your own, you have to have your own kind of structure.
mm,
And it doesn't have to be the same for everyone. It's just you have to have a routine.
yeah,
And I realized that I need a routine. And I think that's just very, very different from how I used to operate before. So I'll say that also it always takes longer than you think. Of course, you can plan to execute things at a certain stage, but it will take a bit longer. So
mm,
don't beat yourself down if, the results that you're seeing one in this month is not how, what you actually want, because actually things do take a bit longer. And yeah, sometimes it's very tough to see that, but generally that's what it's like. But also, one week you might hear nothing, and then the next week it's like all the people that you had
100%.
reached out to, all of them are coming back at once, and now
That's
your
always
inbox
the
is just
way.
and now your inbox is just full of stuff. So
100%.
yeah,
You're like, you'll have the week when you're like, oh, I'm going to have to fold this. And then the
yeah,
next week they all come at once and you're like, why couldn't some of you come last week?
exactly.
Just spread yourselves out,
Yeah,
please.
yeah, yeah. So that's another thing, and I'll say also. So there was something very interesting in the accelerator that I did before Texas, which is that before you get into a co-founder relationship, maybe that you should talk about your personal life and maybe what is
Mm,
important to you or how you operate, whether someone is a morning person or all of these things, because it's always heightened. It's kind of like marriage, right? Anything that happens when you're dating, it becomes heightened once you get married.
I've heard. I'm like nodding. I have no idea. Yeah, sure. We have married friends.
We'll
We
see.
know.
Exactly. We know. We're sisters. um, yeah. So like, I think you should always do check-ins.
Mm,
Like what's in, so for example, maybe before you get into a co-foundership, maybe you're single, right? And working up to 10 p.m. is fine. And your
mm.
co-founder is like, oh, I can rely on this person because they can work till 12 p.m. or
Yeah.
10 p.m. But then let's say 3 months down the line, things have changed, whether it's family or there's a personal relationship. And now you actually want to work at 5. You want to leave at 5. And I know that of course it's your personal life, but it's always good to just let people know where you are, well, especially co-founder, know
100%.
where you are at each stage of your personal life and also your professional life, just so that they're not thrown off,
Mm.
because you always have to communicate effectively. So I'd say definitely those are some of the key learnings.
And I think it's so important. And I think the other thing as part of that is, again, we love the relationship analogy, but it does
Yeah,
work so well. Like in a healthy co-founder relationship, you shouldn't be afraid, in my opinion, to discuss your personal finances.
absolutely.
Like,
Oh,
actually, I'm really stressed this
absolutely.
month because actually I'm
Yeah,
personally up against all these things.
absolutely. No, absolutely. Because like, I would say like for some time after the accelerator, maybe we funded us. Obviously, we didn't have any financing into the business, so we're happy to use our own savings to look after
Mm.
ourselves. But then, how sustainable? How long can you go and do that for? But I also think, I think that's very important, because I think when you are in a business, you have to make sure that you actually run a business, because if you're like, okay, we won't have to pay ourselves, so it's fine, that's not good. That's not good, because you're not motivated to actually make sure the business works. I think don't get into the habit of, okay, I can forego salary for 1 year. And no, I think try and see how you can actually create a sustainable business and pay yourself or pay employees or what have you.
And you're right, you
Yeah,
need to have at least a point where you're going to pay
exactly.
yourself a salary. And it's
Yeah,
tricky. We often talk about this with investors.
yeah,
You can't take a market rate salary
yeah.
if you're trying to go
Yo,
after
you
investment,
can't. You
because
can't.
they're
Yeah,
like,
yeah,
why am I paying you a very nice salary when
yeah.
you also have equity and I want you to be incentivized by that? But depending, if
Exactly.
you haven't taken equity, then maybe you can.
Yeah.
And I do think it's something I really personally
Yeah.
don't agree with, this narrative of like, well, you need to be really hungry, like
Yeah.
practically. I'm like, no, I'm sorry, like, let's just think about this. If you're hungry,
That's not
all you're thinking about is like, where is my food?
Yeah.
And let's be honest, we've all
Yeah.
been in a Tesco or a Sainsbury's when we've arrived hungry. You don't shop well.
Oh my
You
goodness.
buy
Absolutely.
everything.
Yeah, yeah, yeah. And you buy the unhealthy stuff.
100%.
Yeah,
And it's
yeah.
the same thing. Like, I
Absolutely.
think this like idea of like, I want my founders hungry. I'm like, no, if I was investing in people, I want them well fed and well rested.
Yeah.
Because like, that's when you do good work.
Absolutely. No, don't be hungry. I mean, I'm hungry for success, I guess, but like, don't, honestly, no, it's true, because then you become irritable and then you start to annoy everyone you're working with.
Okay, well, let's go next to talking about like funding strategy,
Oh, yeah.
because I think this ties in for founders to
Yeah,
when do I raise?
absolutely.
What does raising actually mean for me? To our point, like, you still can't take necessarily, if you're raising your first round, probably a huge salary.
Yeah.
But what have been your thoughts on fundraising?
Yeah.
Obviously, you've come in with this, we want to be venture backable perspective.
Because of obviously the market at the moment is quite conservative. And I would say for Liquify, obviously, we're 2 female founders, which I love. Talk about in the fintech space. And also we are a cross section of, obviously, there's the Africa element in the way UK business. So sometimes it might be slightly trickier than some other businesses. But I would say right now, because of the nature of the environment, I would say that a lot of businesses can focus on maybe getting angel investment. So talking to sort of family, friends, and people within their networking space. So that's where we are at the moment. We have had really good feedback in terms of the product and also the market or what have you. But I think we want to get more experts, angel investors on our cap table, who really understand our product, who understand who we are, and also continue to build sort of our pipeline and also the traction, and then go into VCs next year, where we have maybe a little bit more bargaining power when it comes to negotiating. So I'd say that's where we are, especially if businesses are not sure, maybe if they want to maybe higher valuation, or they think that they want to work on their business. Because when you're talking to a lot of VCs, it requires a lot of time and effort. So that means there could potentially be some time away from the business, or there's a lot of work involved in trying to balance both. So you have to be quite strategic about that. Can you handle that at the moment?
100%.
Yeah,
And to your point, it takes you off building the business.
exactly.
And building the business is what gets you the better
Exactly.
negotiation.
Exactly.
And much as we think
Exactly.
it's fucked, that bias in the system does mean that if you're female founder of
Absolutely.
color, you have to prove more, which
Absolutely.
is colossally fucked.
Absolutely.
But
Yeah.
if you're up against it, why not do something that's going to help you in the business anyway, which is get those traction points with those experts.
Exactly.
And then you're in a better, like that's my 2 cents on it. And it's,
I absolutely agree.
don't lower
Yeah.
your ambition, but do get more proof points if it doesn't hurt you.
Exactly. Exactly. And also I would say that make sure that as you're doing that, you're also building networks and making sure that you have people that can speak for you when you're not in the room and what have you. And I would say that we are lucky to have the support of a lot of people that want to support us. So I think that's really helpful.
I love that.
Yeah.
And that's finding people to speak for you in the room. So powerful.
Yeah, definitely.
Final 2 questions. And these are our quick fire ones. So one is, what have you been proudest of so far as a founder? What's been your proudest moment?
Wow, I love that. I would say my proudest moment is actually, this might be weird, but I would say like having a good co-founder and being able to work, because like I said before, I'm someone who was so focused on doing things myself. And I feel like now I've learned so much with the product and also with my co-founder. And I'll say that's probably one of my proudest moments. Yeah, no, I'm really, really happy about that. Because sometimes, as some age or at some stage, some people don't want to learn anything new. And I think I'm learning a lot from the product, from our customers, and definitely from my co-founder, which is great.
Love. And you're right. It is also like an underestimated skill
Yeah.
to be able to find and work with someone new at that level.
Absolutely. Because you can be a solo founder, but actually there's a lot more work you can do when you have a co-founder. And having the right co-founder, like I said, it's hard. So when you find that one, it's great.
And I do think that's the point. Like, we come back to this a lot with different guests who have or haven't got co-founders. And often when you meet someone who's a solo founder, it's because they haven't found the right person.
Yeah.
Like, never settle.
Yeah.
It's like romance. Like,
Yeah.
don't go with the like really, really poor choice just because you're like, everyone's playing musical chairs and
Exactly.
I've not got a chair.
Exactly.
But actually, if you can find it, at
Yeah.
least for me,
Yeah.
I've learned a ton through it, and
Yeah.
it's lovely to hear your experience as well. But to your earlier point of advice, don't not do something, like get started when you're waiting for a co-founder, even if you think you're looking.
Exactly. There's another friend in Texas who was a solo founder, a young woman, and she's doing amazingly well. Like, she's a solo founder, and I think you can also do a business solo. But if you feel like you need someone else to work with, definitely, be open to it. But just don't join any relationship just because.
100%. Okay, final question.
Yes.
What is the best piece of advice you've ever received?
Oh my goodness. So I would say the best piece of advice is that you need to take up your mental health. Like, make sure you're eating right as you're building a business, exercise it, because it can be very difficult when it comes to time that you might neglect your personal life. And I would say that that's something that you have to make sure that you're also working towards improving whilst you're also doing a business. Because most of the times you tend to neglect one side of your life because you're like, I'm chasing this dream, I'm building this company. But it's very important to look after yourself. And I think that's what I'm trying to do. So for me now, some things I have started to do is like time blocking as well, just so that I can try and be more efficient in the space that I have set during the working hours, and then make sure that I'm also looking after myself after those hours, because you don't do that, it's probably detrimental to yourself.
And it's I often find I'm coaching founders who are like so beyond stressed that the idea of pausing to take stock, to work out what to cut is unmanageable.
Yeah.
But it's so important.
It's so important. You can start a successful business. What if now you've lost all your friends, or now you're honestly, or you're not healthy, you can't enjoy the fruits of your labor? Like, what's the point?
100%.
Right? Yes, of course, there are moments where it'll be very, very tough, but also find those moments where you can switch off if you can and enjoy yourself.
Love it. Thank you so much for coming on the podcast.
I'm so excited. Thank you so much for having me.
Loved it.
Great.
Thank you for listening. Before you go, please do take a minute to follow so you never miss another episode. We have some incredible founders coming up. And I always love to hear what resonates with listeners. So do drop us a direct message on Instagram @NotMyFirstGuest with any moments that meant something to you, ideas for future episodes, or your own entrepreneurial stories you want to share. Until next time, happy startupping. One of the most annoying things that can happen to any of us is getting cold outreach that feels like the company hasn't done any research on you at all. So it's no surprise that investors like outreach from founders that feels like they've actually researched them. That's why I was so excited when the founder of ShipShape.vc, Daniel, reached out to me about sponsoring this episode. ShipShape.vc is a search engine that's free for founders to use to find investors who've been sharing content that shows they're interested in startups like you. I've already been talking about ShipShape.vc on panels I've been on and to founders I coach, because I genuinely think it could be a massive game changer for startups. There's a link in the show notes to learn more if you're interested.